Hello everybody, welcome back to my channel Trading Secrets. This channel is for entertainment purposes only. For those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. Through this channel I'll be providing some stock analysis and a quick update on the $1 Million Challenge. If anybody's not aware of this, this is a journey of an investment of $1,000 to a return of $1 million over a period of 3 years using a strategy called compound return investing. So the objective is try to get 201 trades, each with an average return of 3.5%. It's not 201 consecutive trades, we do take into account losses. So for further details about how to join us for less than $9 a month, information is available in the description below. In today's video, I'm going to be breaking down the presentation that James Angel shared with Congress, so stay tuned for that. Before we get started, let's have a look at what's happening in the market. So first shout out here is to Unusual Whales, who've stated here a default could lead to an economic downturn as bad as the Great Recession, with 8 million Americans losing their jobs and the stock market's value falling by about 45%. So it is very, very important. In fact, it is critical that Mr. Biden does not ensure there is a default. It is imperative for the stock market and for the livelihoods of millions of Americans that that is avoided. So going over to the news with regard to inflation from Fox Business News here, inflation has pummeled US households' finances last year. A Fed survey has found, and I think I will go one stage further to say that inflation is a problem worldwide, including in Europe, Asia and the United Kingdom as well. And this is something that has happened, in my opinion, as a direct consequences of the Ukraine and Russia war. So going forward, we need some measures from the government to minimize this impact. So let's get straight into the presentation. So I'm going to start with the post that I shared earlier today. That is with regard to the presentation. So I'm going to tag in here James Angel, and my message to him here is I am aware that you use one of my thumbnails without my permission in your presentation to Congress. I also believe that you have misrepresented many of the true facts. And for clarity, I am making James an offer, and that offer is for him to come onto a public Twitter space with the MMTLP community, join us for some question and answer where we can discuss and hopefully have a positive dialogue in terms of our opinions, your thoughts, answer some of the questions, and in the hope that we can reconsider some of the actual facts. So for now, I would like to give you the benefit of the doubt that maybe you didn't have the true facts. However, I know many people might not agree with me there, and that would be because of this post that James added on the 15th of March 2023. Where he said, it's not FINRA's fault, they had no choice. My prime suspect is the management who engineered a security designed not to be traded. So remember, David Lauer had a similar position. What I would like to point out to you, James, Mr. James Angel, is that David Lauer has now changed his position, and he does feel that FINRA has questions to answer. So hopefully, if you can join us and reach out, that we can also fill in the missing information that you may not have had. So let's get straight into the presentation. So before we get started, one thing I would like to say is that I am going to give James Angel the benefit of the doubt in terms of maybe he was not aware of the true facts, in the hope that he can change his opinion. So let's have a look at a background profile of him. So first of all, he represents Georgetown University since 1991. So he is a professor. He's qualified in certified financial planning. He's also a chartered financial analyst, and interestingly, he's testified 6 times before Congress before as well. So he has quite an important background there. In other information with regard to MMTLP, what he stated here in his presentation, he talked about short selling and naked short selling. So we're not sure what was verbally said in this presentation, so we only have his slides. So we can't really comment in terms of his verbal statements. So he's also talked about numerous allegations of skullduggery from the MMTLP point of view, so hopefully he was a little bit transparent on that. He's also raised the question of who is protecting investors, ? So that is also a question that we would like answering, and it would be interesting to see what kind of response he got from Congress and if he could share that. So he's talked about a need for an overhaul of the overall regulatory structure. So we know the system is broke. We know the system is against the retail investor, and it is definitely in need of repair. So the next slide here, he's talked about OTC markets regulated by FINRA, which is again getting into the important stuff. He's talked about FINRA being a self-regulatory organisation regulated by the SEC. So I think although it's self-regulatory, it seems to be a conflict of interest there to say self-regulatory but regulated by the SEC. So it doesn't quite make sense, because the SEC very, very rarely seems to step in and obviously regulate FINRA. All brokers dealers must join. FINRA budget does not go through Congress, but what I think James has failed to mention here to Congress is he's tried to give this in a positive light to say, well, the budget is not something that's going through taxpayers, it's not going through Congress. So obviously giving a positive image to Congress about FINRA. However, what I would have liked James to say about FINRA's budgeting is, where does their money come from? So the money actually comes primarily from the broker-dealers. These are the people they are regulating. So if you think about it, every single member of staff in FINRA who is employed by FINRA getting paid, many of these are on salaries in excess of $1 million. Where are they getting their money from? They're getting their money from broker-dealers. Who are they regulating? Broker-dealers. Is that not a conflict of interest? And obviously they need successful broker-dealers, profit-making broker-dealers, in order for FINRA themselves to continue. Let's have a look at this slide where James is talking about how a short sale works. So he's very, very generic here. He's used very, very simple language. He's not gone into the detail in terms of the rules and the regulations with regard to short sales. He's also not really talked about fail to delivers. And I think the fail to delivers, so I think what he should have talked about here is FINRA's rule 4320, short sale delivery requirements. So I think this would have been much more informative if he'd have gone ahead and talked about this with regard to the fail to delivers to Congress. So let's see if we can obviously highlight the important areas that he should be aware of. First of all, fail to deliver position as registered clearing agency and non-reporting threshold security for 13 days, settlement days. The participant shall immediately thereafter close out the failed to deliver position by purchasing securities of the like kind and quantity. So this is a rule here that was not enforced. This is a FINRA rule and it is there in writing on the website. So this should have been in the presentation. So that's section A. Let's move on to section B. Rule 203 of the SEC regulation SHO may not accept a short sale order in the non-reporting threshold security from another person or effect a short sale in the non-reporting threshold security for their own account. Participant closes out to failed position fail to deliver position by purchasing securities of the like quantity and the purchase settlement at a registered clearing agency. So they will not be allowed to obviously continue unless they obviously deliver and close out their positions. So this is something that was completely ignored, but I certainly think this was something that was not raised in the presentation. Let's now get to the situation with regard to counterfeit shares. So we can see here that James has added a slide on that, but it looks like he's basically just giving definitions, examples, but there is no correlation here with MMTLP. And I certainly think he should have explained how this was very, very serious in terms of certainly on the last trading day when it was driven down to close to $2.90 through counterfeit shares when people were not selling. So hopefully he in any correspondence that James can clarify that. And then this is the next slide here where he used one of my thumbnails. However, I'm not sure what he was talking about when he was talking about this thumbnail. So hopefully he can come forward and explain what the purpose of my thumbnail was. And again, just to reiterate, this thumbnail was not given with my permission. James did not contact me, and what I would like for him is to obviously explain that, and I'm giving an open invitation to attend the Twitter space where we can have a discussion about this, and as far as I'm concerned, if he does that, then no issues for using this thumbnail from my point of view. But what he has added on after that is his background as a finance professor. I think some people may have misunderstood this to be my background, but it's not my background. This is his background. He's saying he practices what he preaches. He's a long-term buyer, he's a shareholder, he looks at zero commission, and obviously he's also stated here that he is a holder of Torchlight Energy, so I'm presuming he's also holding MMTLP. So let's move on to the other slide here, where we can see what James has also talked about is MMAT spin-offs of hydrocarbon assets to MMTLP. So he's talked about the spin-off as a special class of preferred stock, management plan for spin-off to not be publicly traded. So I am hoping here that he talked about the nefarious actors allegedly who created this ticker without company permission. So and I can't see that on the slide here, so I would like James to be aware of that this was created allegedly by 2 market makers, so that should have been in the presentation as well. So he said here, MMTLP began trading over the counter on OTC markets. Brokers filed Form 15C211 indicating that information was available. So this slide certainly needs to be much more stronger and bringing it into account the nefarious actors who created MMTLP. And the next slide here, he's talked about MMTLP Nexbridge Hydrocarbons. The company decides to spin off Nexbridge Hydrocarbons to MMTLP holders, does not register shares with DTC. Shares cannot be held or transferred there. He's also tagged in here Timothy Sykes under the heading Anticipation of Short Squeeze Pushes Up Price. Then he's talking about the record date or dividend of Nexbridge, December the 12th, 2022. So I'm hoping he was also providing some additional clarity in terms of how this process was not completed according to what was expected. I'm hoping he talked about the corporate action. I'm hoping he also talked about the U3 halt, which also seems to be missing, which I think was very, very important. And now let's look at the next slide here, where he's talked about the stock drops to $2. I think it was $2.90. So hopefully he's a little bit more accurate there, even though we could say if you round up $2.90 to one significant figure, it would be $3, not $2. FINRA halts trading December the 9th, U3 halt. So let's have some clarity, let's have some explanation. What was the reason for this U3 halt and why are FINRA silent? So he stated here, investors who bought hoping to sell in the mother of all short squeezes on December the 11th or 12th left holding a bag. So how about putting in some questions about why that happened? And obviously, as far as investors were concerned, we just wanted our 2 days of trading. Whether the squeeze happened, whether the squeeze didn't happen, that was not something that we would have complained about. If the 2 days of trading completed and every shorts closed their positions and there wasn't a squeeze, nobody would have obviously complained in the slightest, because we accept trading. But what I think he should have talked about here is the shorts not closing their positions and why that was obviously a very, very significant problem. And let's have a look at the slide. He's talked about allegations. He's talked about numerous social media. He's talked about YouTube postings, Reddit, allegations, and he's talked about trading halt. Obviously, conspiracy against FINRA, SEC, Wall Street to protect market makers. I'm not sure that's a conspiracy. I think that these are questions that need to be answered. He's talked about other pump and dump manipulation, claims of FINRA fraud to deflect blame, question mark. So I'm not too happy with that statement there, to deflect blame. Claims of FINRA frauds. I think all we want is honesty, communication, transparency. And I think another thing that obviously James has failed to mention in this presentation is release of the blue sheets, release of the data, because the data will provide the facts. So again, none of the presentation mentions that. He's talking about insider scheme to walk away with hydrocarbon assets by depressing the share price, question mark. He's also talked about amateurish attempts to squeeze shorts that backfired, and I am glad you are investigating. So again, when he's saying I'm glad you are investigating, is that Congress? Is that a cryptic message? And is he aware that Congress are investigating, or who is the you? I am glad you are investigating. So again, some clarity from James on that would be appreciated. Let's now have a look at the final slide in terms of what needs to be done. He's talked about begin the conversation with for a major overhaul of the structure of our regulatory system. So I'm not sure if he's in favour of this or if he isn't. He's talked about issues, overall structure at federal level. one consolidated regulator like Japan. So I do agree that there needs to be one regulator, and that is probably the SEC. There is no role for FINRA. FINRA is not required. We could have FINRA as a part of SEC, so obviously that means it would be subject to the Freedom of Information Act, and that's what we need. So Twin Peaks like the UK, some combination, state versus federal responsibilities, insurance question mark, role of SRO, self-regulatory organisations. I think this whole thing about FINRA, self-regulatory organisation claiming immunity and absolute immunity, I think that is a joke. That needs to change. Nobody should be immune because obviously you are, by having immunity, you are basically saying, give us a licence to make mistakes, give us a license to break the law, give us a license to get things wrong. Nobody should have this kind of license. And finally, to finish off, I'd like to share some reactions to the presentation news. So first shout out here is to Cable, who stated, wow, if that's the production value of a Georgetown professor, I'm super glad I didn't go there. Was his goal to lull them to sleep before he got to us? It's obviously didn't spend much time on this. So I think that is a reference to the huge number of mistakes in there, the lack of clarification, the lack of questions, and lack of probably a balanced presentation. So next shout out here is to Marduk, who stated, this is incorrect. Metamaterials was publicly traded on the Canadian Exchange OTC market. So yes, I can confirm that. You are correct there, Marduk. I wonder how many of those short positions were carried over to the NASDAQ. So what James has stated, he stated that Metamaterials was a privately held materials processing company. So again, a little bit of incorrect research there. He's also talked about reverse merger to take Meta public. So again, good, some good valid points there by Marduk. Next shout out here is to Patrick. He's talked about slide 42 where James has made an error with the dates. Key dates, December the 8th was a Thursday, not Friday. And I know you might say, well, that's a minor error, but as a professor, it's not. This is something that should have been fact checked. December the 12th was a Monday, not a Tuesday. So not great due diligence there. Next shout out here is to Bob. So Bob is somebody who's saying he spoke to Professor Angel after he briefed Congress. At the time, Dr. Angel has never heard of John Berger. That is not striking me with confidence. You're doing a presentation of it on MMTLP and you've not heard John Berger, or you've not heard about John Berger, or the forging of documents to initiate trading of MMTLP. So that is what we would like to clarify in a space chat. That's what we would like to clarify in some further discussions with James, and I am giving him the benefit of the doubt and also an opportunity to listen to us. So Bob is also saying at the time he had no clear idea of the number of open shorts. He guessed there were only a very small number. And finally, to finish off, I would welcome James to reach out so we can have the further discussions, more clarity, and hopefully a question and answer session with the community in the view that we can obviously present our point of view. So I'm sure, James, you would agree that it's certainly a good idea to listen to both sides before making an opinion, and hopefully we can do that. And finally, thank you very much for watching. Please stay tuned.